Good afternoon, everyone. And it's a real pleasure to be here this afternoon. And thanks, Chukwuemeka. I don't think there's any better way to actually set the day going than the way you have actually introduced it. You only need to cast your mind back a few years, literally even up to 3-4 years ago, when people are talking about fintechs, and you say, what the heck are they talking about? What's all of this thing about? Then you cast a year and you come back to you're not in Q2 2021, but just cast your mind back to Q1 2020, or this time 2020. The whole world was falling apart. It was all about COVID, it was all about lockdown or shutdown. What's going to happen to fintechs? Where are the investments going? And all of that stuff. And then straight away, jump into 2021, and we are here at this point in time. The industry is back there, it is bubbling around the world. There's been some exciting statistics coming out today in many ways, really. One of them is around China. I mean, China is powering again, beyond everybody's wildest imagination, 18.3% growth in Q1, which is fantastic. But you can see that the power of technology in the broadest sense of the word, and indeed the role that fintech, and when we use the word fintech, we're talking about all forms of tech in entrepreneurial technology. So pardon the use of that word in that sense, or accept the expanded use of that word fintech in that concept. So that's what we're talking about here, the role of fintechs, their power, the ability to actually make huge changes in solving problems, adding real value, and driving the economy forward. And that's what we have in Africa. That's what we have to power basically in Africa. And Fintech Nigeria is right in the heart of that for Nigeria, driving all of these within Nigeria. And we're very proud of our ecosystem. Our ecosystem consists of over 220 members across a whole set of industry supporting fintech, including the media, by the way. They're part of that ecosystem because you can't do anything without them. And we really want to thank the members for the fantastic work that they've done in actually driving this forward as well. You know, FintechNGR, like I said, represents well over 220 members across the industry. And our work is quite vast, but we actually divide it into 3 main themes, you know, and in no particular order. One is around advocacy. And if you look at our advocacy theme this year alone, you know, there's been a lot of excitement around cryptos, cryptocurrencies. What does it mean for us as a nation? What does it mean for youth employment? What does it mean for innovation? What does it mean for positioning Nigeria as a center of excellence for new technology and exploiting that for the growth and development of our economy? And FintechNGR and the advocacy group have played a very, very key role in all of these. You know, we've had the regulators forum, which has all the main regulators in it, and we've had lively conversations around what the regulation should be like, what the market should be like, what the industry should be like. The management of FintechNGR have actually pulled together key members of the association to drive around and produce a paper, an insightful paper, which has been sent around, you know, to drive policy and to shape policy. And we'll continue to advocate for our members and the wider industry in terms of deepening that market and actually solidifying it. So this bridge between innovators and regulators actually is one of the things that we are set up to do and will continue to do and drive as best as we can. You know, the other one is around accelerate, you know, basically accelerating the development of fintech within the industry. And that has many flavors as well. You know, in terms of acceleration, I mean, Chukwuemeka talked about exits. That's part of acceleration. But what about funding? If I bring my money in, how do I take my money out? You know, what about the governance around bringing these things in and taking them out and running them in a manner that actually creates unicorns, which is what we're after ultimately. Of course, there will be a few failures, in fact, many failures along the way. Well, you know what? As long as we can get as many unicorns popping up, then that's fine. That's not a waste. And then third but not the least is connect. So the connect thing is around actually making sure that we link up the ecosystem and we take the best out of the ecosystem. So there's no point in all of us working in silos. It's about linking our collective networks up. It's about linking our collective knowledge up and actually leveraging that to develop the ecosystem. And you can see the lineup today, really. It has a lineup of entrepreneurs, leading entrepreneurs, regulators, innovators, and that's all part and parcel of what Connect is to do. So I'm very excited that we're able to meet both physically and virtually. You know, those who have been able to make it physically here, I really, really thank you, you know, that you actually made the effort. You know, and I know I can see people are with their masks. I had my mask on, by the way, just in case you were wondering. You just can't speak very clearly with a mask on there, and we're safely distanced around there as well. And those who are at home or at work or wherever you are, thanks certainly for joining us. I think the best analogy to use is the analogy of gold dust when you talk about unicorns. Everybody wants it, but it's in social. The availability is almost tending towards zero. So anything that is in scarce demand, or in scarce supply rather, anything that is in scarce supply, creates a demand problem. And then there's the basic laws of economics basically then sets in, fundamentally. Same thing goes with unicorns. I guess a better example in our industry is about Bitcoin. You can see what's happened to Bitcoin. It's almost the industry equivalent of gold dust. If we're going to bring back 500 or 1,000 years of history into today, I think that's the closest really. And in all of that really, you have to take a step back and then look at the bigger picture around unicorns. Really. In the whole world today, there's circa 600 unicorns. Their values are about $2.2 trillion. Really. And when you take that whole size and you zoom it down to Africa, I think at best count, we're only coming up with 5 at best. And even some of those 5, some of you may argue they're not even pure African setups, So, but let's say they operate in Africa. So you're talking about the Jomis, the Prometheus, the Celsi, Interswitch, and of course, the very own Flutterwave. I'm very, very particularly proud of what Flutterwave have done. Flutterwave have a special place in this location. Yeah, this is where they came up from, by the way. So Daniel was hosting us. Daniel is the head of the AFF. We'll be extremely proud, and the rest of the AFF team that a lot of the work that we're seeing in the industry, has some roots and lineage here. I want to thank our guest speakers and panelists. We have a fantastic lineup today. A really, really fantastic lineup. And I don't want to take their time for granted. It's really fantastic, to have Alhaji Umaru Ibrahim, the former CEO of Ndic and Fintech Enthusiast, is graciously agreed to join as a panelist and share his vast knowledge of experience in terms of the regulatory perspective to victory. We have obviously Mr. Musa, Jimoh, my brother. He always graces our occasions and has been a great supporter of a number of things we do in terms of supporting the industry, participating in the industry. We have my good friend and brother, Emomotimi, Agama. Agama is one of the most progressive regulators, I think. I've seen, SEC specifically has been very, very positive and progressive in this matter of cryptocurrencies, taking a very, very robust view of it really, and looking through to see how it can actually be incorporated into the environment. And I think we'll benefit immensely from his experience. And of course, we have Gbenga, who's gonna be obviously the lead panelist and joining us. And it will be really, really great. I think if there's one person that can do justice to that subject matter today, the theme of today, the making of indigenous fintech unicorns. From nuggets to scale, literally from nuggets, literally from just raw simple code, to global scale. I think there's no other person better than Gbenga and the panelists that we've got to support it. So without much ado, thank you for being here. I think it's been great to be here. Stay safe, keep safe. We're coming out of this pandemic. Unfortunately, there's still some countries that have gone real deep inside. Just before coming, there was some grave news about Brazil. 1 out of every 4 people losing their lives to COVID is actually in Brazil right now. 1 person every 20 seconds. So that means that it's not over yet, but we have to keep trusting God, but also keep staying safe and doing all the right thing. So long live Fintech Nigeria, and long live the innovators, who are breaking the rules, and long live to those who want to create the next unicorns. We're here to support you and wish you all the very best. Thank you.
Okay, ladies and gentlemen, I'm highly honored to be invited to deliver this keynote address to this quarterly meeting of the association. Association of Nigeria, organizing the event. This is also coming soon after my recent retirement from the NDIC. Let me say that I had already prepared this paper and sent it to the organizers almost 2 weeks ago, before I got a copy of the agenda or the program. And according to the program, I am expected to specifically address the issue of relationship between regulators and innovators. But on this note, I would like to say that regulators are also innovators. So perhaps what we mean here is the relationship between regulators and operators. Because for regulators and survivors to successfully survive and regulate fintech, they must also be very creative and very innovative. Having said that, ladies and gentlemen, even though we are familiar with the definition and application of fintech, I would like to mention or to remind us of, if you like, a classical definition of fintech that has been advanced by the Financial Services Board. And according to its working definition, fintech is technologically enabled financial innovation that will result in new business models, applications, processes, or products with an associated material effect on financial markets and institutions and the process of financial services. I know I'm preaching to the converted, but pardon me for reminding us of this classical definition, if you like, of fintech by one of the leading international standard setting, that is the Financial Services, the Financial Stability Board. However, it is interesting to note that according to some critics and according to some such as Professor Arthur Berries, he is a professor of finance at IMD in Lausanne. According to him, the term fintech, considering the fact that all of the finance is based on some sort of technology. According to him, the extent to which new technologies are being merged with existing financial tools to create new business models, what he calls fintech innovation. Rather fintech innovation. As we are all aware, fintech empowers the financial services consumers, operators, and regulators, a wide range of options, services, and information relatively cheaply and securely. For operators, it reduces cost of acquisition and retention of customers and more cost-effective regulatory supervisory compliance. It facilitates financial inclusion, reduces cost of integration and interoperability. And in the process, providers and regulators have more efficient oversight tools. And I'm sure by the time we listen to the presentation from the Central Bank of Nigeria, which the director also would like to mention some of the steps that the NDS has taken in ensuring that we understand the phenomena so that it can supervise it more effectively. Having said that, as we know, banking, let me talk about the relationship between banks and fintech-based services. Banking has witnessed continuous innovation in products, offerings, and services. Wide area networks, ATMs, and mobile banking are just a few examples of fintech services that have transformed banking. Fintech has improved the user experience and increased banking efficiency and profitability. In this regard, ladies and gentlemen, let me also permit me to share with you an article on a case study titled How a World Early Bank in Singapore, that's the DBS, successfully reinvented itself. This bank, a Singapore-based traditional bank, successfully reinvented itself. This article was published by IMD Fintech newsletter, and it contained an interview that was held with Paul Coburn, who is the Chief Data and Transformation Officer of the bank. And Mr. Coburn narrated their experience in trying to embrace fintech and how fintech assisted them to transform their bank. In 2009, the bank was a traditional bank that had a reputation of being slow, having poor customer service, and average financial performance. However, their subsequent transformation journey has been an iterative process, and it is by looking back and talking to other banks that they have identified some success drivers. And what are these success drivers? According to him, they include painting a vivid picture of the future and motivating your team to move towards it. In achieving this, you need to create a new business model through and towards digital thinking by getting business and technology teams to work more closely together. Digital transformation is huge and complex and can even be very confusing. You should therefore break the tasks into manageable chunks and encourage the whole organization to buy in. Employees buy-in cannot succeed without creating a climate for change in the whole organization, championed by empowered cross-functional teams and not only confined to a handful of innovators. At the end of the day, the bank eliminated 250 million customer hours and enhanced its customers' satisfaction rate within a year. The bank relied on their ability to create a positive employee culture and behaviors, which made the transformation an organic process for enhancement of service delivery and customer satisfaction. Now, let me quote some statistics from EFINA, coming back to Nigeria. EFINA, as we know, is one of the leading organizations that conducts periodic research into issues relating to financial inclusion and innovation in Nigeria. According to EFINA's report, as of September 2020, there were over 200 fintech companies in Nigeria that were able to attract over $560 million in the last 3 years. The sector with the highest fintech participation is payments, which stood at about 39%, followed by lending at 28% and savings at 11%. The report further stated that fintech activity accounted for only 1.25% of total retail banking revenues in 2019. Obviously, there is an apparent link between fintech and the banking system. Most fintech innovation depend on connecting to the banks for access to consumer deposits, for comparison by data aggregators, mobile wallets, and other numerous services. Again, the CBN's recent website reported a huge leap in fintech-based transactions. For instance, the volume of fintech channels like web and MMO transactions were 2.23 million transactions each in 2012, but rose to 50.8 and 87.1 million transactions in 2018. Ladies and gentlemen, let me address the issue of consumer protection, which is very central to the provision of any financial service, and particularly fintech. Globally, financial service consumers have a growing array of services they can choose from. While some of these services can be relatively easy to understand and operate, such as the ATM or mobile money, some can be very complex, like digital currency that we've been talking about, that even the educated and sophisticated consumers will find somewhat confusing. The complexity of fintech products requires a deep understanding by both consumers and regulators. For instance, how do consumers know what is actually going on in the background when they are accessing financial app? There are issues regarding consumer rights and privileges that need serious thoughts as we talk about data aggregation and terms and conditions on apps and websites. I will talk more about this when I cite the various applicable laws that enhance the protection of consumers, both globally and locally. Fintech innovation, banks, etc., should therefore guarantee the protection of consumers' data. Europe is guided by PSD2 regulation. The Nigeria Information Technology Agency, NITA, is trying to enforce the protection of consumer data in Nigeria. I have more to say on that. Section 37 of Nigeria's 1999 Constitution formed the foundation of data privacy rights and protection in Nigeria. Section 37 guarantees and protects the rights of Nigerians to privacy with respect to their homes, correspondence, telephone conversations, and telegraphic communications. It deems privacy in this regard as a fundamental right, which is enforceable in a court of law when breached. Prior to the enactment of the Cyber Crimes Prohibition Prevention Law and the Nigeria Data Protection Regulations, most cases of data privacy breaches were enforced under this section. And I think it's very, very important for all fintech operators to know the import of these laws and regulations. Ladies and gentlemen, I have a lot of details about this and I don't want to bore you with that. I believe by the time you get my paper, you will be able to dive more deeply into the Nigerian Data Protection Regulation 2019, in addition to the Cyber Crime Prohibition Prevention Act of 2015 and other relevant sections of the Nigerian Constitution. Let me quickly address excuse me, the issue of risk management. Related to this, ladies and gentlemen, is the central issue of risk management. Although fintech innovation have provided enormous advantages, we have to consider the various risks, challenges, and opportunities that are associated with fintech innovation. These include the following: integrity of data in the banking system. We are all talking about this all the time, and we are always worried about it. Consumers' protection in view of fraud, cyber attacks, and data privacy. Inadequate consumer protection frameworks, which will reinforce the confidence of consumers. The need for a level playing field through regulation and supervision. Fostering innovation while ensuring effective regulation and supervision. And on this particular issue, we remember the recent debate that arose from the CBN's recent decision to stop banks from aiding and abetting, if you like, transactions relating to cryptocurrencies. And this attracted huge debates. And in the wisdom of the Vice President, he called on the central bank and other relevant authorities to try to accommodate, this kind of innovation through creative and innovative supervision and regulation. I don't want to join issues on this, and I think this is something we can that has been discussed and it will still continue to be discussed. These are issues of debate globally, depending on the economic and financial system of the countries. I've cited a few examples of where countries where they have embraced fintech and those that have, tried to ban it in the same way. But without going into the details, all I can say at this stage is that, as far as I'm concerned, central bank cannot regulate or supervise what it regards or it does not regard as legal. Cryptocurrencies are not legal tenders. They are not recognized by the central bank, and definitely they are not insured by the NDIC. And all we've been saying is that it's your fundamental human right to trade in any currency you want, in whatever form you want. It's up to you. You make money or you lose money. Nobody is going to stop you to do that. But then again, going back to the current date, the central bank has pointed out clearly that there is gross abuse in utilization of cryptocurrencies by fraudsters and by a lot of criminal elements which tend to undermine the economic progress of this country. And this happens in other clients, and it will continue. How you tell it is a different matter. Now, other challenges of electronic banking is the existence of Ponzi schemes and unregulated digital currencies. Ponzi schemes, as we are all aware, are illegal and fraudulent investment schemes. Unfortunately, fintech innovations have made it easier for unsuspecting and greedy economic agents seeking obscene returns to loot their funds. One of the leading founders of Ponzi schemes died just yesterday in custody. He was jailed for several years in the United States. This was reported yesterday by the BBC. And as you are aware, all the regulatory and supervisory agencies in this country, the Central Bank, NDIC, Securities and Exchange Commission, notably have been trying hard to ensure that the generality of the public understands, the menace of Ponzi schemes, such that they don't unnecessarily get roped in and lose their hard-earned funds. Now, let me quickly come to the role of NDIC in promoting fintech innovation. These are facts. I've left NDIC a couple of months ago, so I'm not speaking. I don't have the authority to speak on behalf of NDIC, but what I'm saying are facts that are there, and we are proud to refer to them. Now, before I say this, one of the critical questions we always ask is, how do we find the right balance between innovation and regulation? Regulation plays a significant role in managing systemic risk. It is also observed that in some instances, the regulations promote fintech innovation to the detriment of incumbents, and in other cases, they stifle innovation and discourage new entrants to the benefit of existing players. All said, regulation should therefore support innovation as countries compete to develop conducive fintech ecosystem. And that's why we in Nigeria, we cannot afford, to do otherwise. The NDIC, as a deposit insurer, provides a unique goal of enhancing fintech innovation in Nigeria from several angles. And let me quote a few, cite a few. First, banks are one of the most important components of the payment system and critical channels of enhancing economic development. Banking supervision is jointly carried out by both the central bank and the NDIC, while the CBN is the primary institution that regulates the payment system. The CBN, complemented by the NDIC, provides the necessary oversight of banks to ensure the efficiency and effectiveness of the payment system. Secondly, the NDIC as a risk minimizer enhances financial inclusion and encourages digital financial services through policy formulation and supervisory oversight. The pass-through deposit insurance framework, which the NDIC has adopted a long time ago, creates a level playing field for mobile banking, while risk premium assessment system ensure that banks adhere to highest risk management standards. The NDIC also ensures robust resolution of regrettably, frauds and other financial persist in electronic and traditional banking. The 2006 NDIC Act mandates all banks to submit statutory returns on frauds and forgeries to the NDIC. The NDIC investigates petitions and complaints received from banks' customers, and other stakeholders on such frauds. The number of the reported cases of attempted frauds in the banking industry, unfortunately, witnessed a substantial increase. A total of 52 or 53,000 fraud cases were reported, for instance, in 2019, against about 38,000 and 26,000 that were reported in 2018 and 2017, respectively. However, the good news is that the actual loss experience declined from 15 billion to about 5 billion in 2019. In view of the realization of the importance of fintech innovation, the board and management of the NDIC undertook a study tour of South Korea and Taiwan deposit insurance corporations in 2019 to study their system of supervision and regulation of fintech innovation. Consequently, on the 16th of October 2019, the corporation established Innovation and Fintech Unit in the Insurance and Surveillance Department, as well as introduction of interdepartmental committee with the following responsibilities. One, identifying disruptions and associated impact on deposit insurance. Articulate the use of fintech for early warning signals and prompt corrective action. Identify current deposits for purpose of insurance coverage. Identify supervisory measures for digital banks. And last but not least, collaborate with other stakeholders on fintech innovations. And on this particular one, we have been working together, like I said, with the Central Bank of Nigeria and to some extent with SEC, so as to support policy framework that CBN regularly dishes out on supervision and regulation of fintech. Now, let me turn quickly before I round up to the issue of the digital currencies debate. Ladies and gentlemen, we are very much aware of the controversies regarding or surrounding the incursion of digital currencies into the payment system. The most well-known digital currency is Bitcoin, but other examples include Litecoin, Ethereum, and Ripple. Bitcoin is declared illegal in a few countries like Bangladesh, but Japan passed a law categorizing it as a kind of prepaid payment instrument. Bitcoin is used globally for payments, but of course without any legal protection for the participants. It should be noted that there is no protection of refund rights or redress for users of digital currencies in case of any losses. Also, consumers can lose all their monies due to theft and fraud. Digital currencies, as we said earlier, are also prone to abuse by criminals. Digital currencies are not recognized as legal tender by the Central Bank of Nigeria and therefore cannot be insured by the NDIC. Undoubtedly, the recognition or otherwise of such digital currencies depend on the legal and regulatory regime of any country. It reflects the level of the depth and sophistication of the financial system. Now, I have a lot of statistics which shows, the level of digital utilization of digital currencies in various countries of the world. For instance, in 2020, in the United States, digital currencies trillion US dollars was recorded. This was followed by Russia, which recorded a transaction valued at about $429 million. And of course, curiously followed by Nigeria, which recorded a transaction of $400 million, and so on and so forth. Well, like I said, that is the good news. There is the good and the bad and the ugly side of all of this. A lot needs to be studied as far as I'm concerned as to the utilization of Bitcoins for digital currencies in Nigeria. They popularly, as we are made to understand, used by youngsters, young people, children. Do they really have the money? Is it a question of having easy access? Or are they being used by some money bags, the new rich, who have found a way to transact in this kind of businesses maybe because of the lack of conducive, if you like, atmosphere that hinders and investment in the country. I think the Fintech Association of Nigeria maybe needs to study more of this and needs to engage the Central Bank of Nigeria in understanding this growing phenomenon in the midst, of course, of poverty, unemployment, and recession.
I would probably just, think, that was an amazing presentation that we just heard. I would like to just basically, kick off from the point of view of, an operator in the industry, and basically just, share, some of the things that we are seeing from our side and how we think, innovation really is useless without regulation, and how basically we see the view that most people do not see, especially where we actually have innovation from regulators as well, right? So from our side, I like to speak a lot about the fact that Nigeria is one of the most innovative countries when it comes to payments in the world, not even in Africa, right? Because I was just speaking to a bunch of people yesterday, and I was explaining to them how Nigeria is one of the first countries in the world to have the instant payment infrastructure, which even the US still today does not still have. We're one of the first countries to have chip and PIN card enabled on our infrastructure before the entire world even knew, the full magnitude of Max Stripe cards. We're also basically, one of the few countries in the world today to have basically scaled, beyond checks. Today, a huge chunk of the payment in Nigeria happens on the mobile, right? A huge chunk of the payments on NIP system today in the country happens via all of these, amazing platforms that have been built. So I think we don't give ourselves a lot of credit for the work that has been done already in the payment scene, both from the foreigners who have been innovating, across the board. So kicking off from that perspective, I would like to say innovators basically, we typically like to go ahead of regulation, but it's a no-brainer that there has to be an ecosystem to exist first before you can even innovate, right? The ecosystem of payment, of fintech, of banking, across board needs to be safe for us to even operate in, right? That is one area that we are also getting accustomed to and understanding the perspective most of the time of regulators when it comes to innovation, right? It's a no-brainer that fintech like ourselves, for example, I like to say that we can only exist today because of the current people like the current regime of the current administration of central bank, and we've seen a lot of allowance for us to be able to operate and and build product in the market, and that is not something that is spoken a lot about across board. That's one. The second piece I'd like to mention is the fact that innovation without regulation can be disaster waiting to happen. Yet, it's important to be able to identify the value innovators are creating, to be able to basically, slice and dice and have the right risk mitigation strategies in place to ensure that those risks are well mitigated and every point of, of ecosystem chaos is well understood by every participant in the ecosystem. I think that's a big piece that's a big piece that needs to be addressed as well as we go along. So maybe this would be a great place to kick off the conversation. And then the other gentlemen on the panel can basically chime in if that is fine. Thank you.
One of the questions here is, what were the biggest challenges that you faced, particularly in the early days, as well as now that you have crossed the unicorn mark? If you can hear me, please take that question, Jimmy.
That's a very interesting question, right? Because, our Flutterwave, we still think we're in our very, very, very early days. We're still trying to figure stuff out across board, right? But what I would say is the biggest driver for us as a company and as a team it's always been, we really want to solve problems. We want to create, we want to create a bigger pie and basically affect our environment. That's the driving force of everything that we do in Flutterwave. Last year, for example, during the pandemic, when it was at its peak, right, we built something called the Flutterwave store. And the goal for that product was we wanted to just help the small businesses who are to shut down because of the lockdown, right? And we thought about if a small trader in Lekki or in Lagos Island or in Kaduna, in Abuja or in Musa market are shut down because of the lockdown, right? How will they make ends meet? How do they keep the lights on? And that was a driving force for us because we thought about how do we help the small businesses in Nigeria today to sell more and sell more. And so we built something called the Flutterwave store. What we built really is like we built an e-commerce website free of charge for every small business that you could think of in Nigeria. And we basically allow them to put their wares online. was so interesting that we even had people who were selling chickens, so we're selling different things, putting those things online for people to come and buy. The value that created is the driving force behind Flutterwave. We are always thinking about how do we make an impact in our community as a Nigerian focused organization trying to scale fintech and payments in Nigeria. And that is a big piece of everything that we do as Flutterwave. I'm mentioning that because it's very critical to understand, what drives everything that we do, right? And that particular product, for example, we're able to, hundreds of small businesses signed up and they started selling on Flutterwave store just because we built that product for them. We were able to partner with delivery companies, we had payment integrated, e-commerce integrated, and basically say, you have commerce, payment, and logistics on one platform for you to sell more as a small business, right? And that was very critical. Part of what drives us as well is also the fact that payment does not exist in isolation. People don't just wake up and say, I want to pay for paying sake, right? We are trying to say, what are the things that people do? What are the things that people do every day? How do we then attach payments to it? And that's one of our biggest challenges at the company, figuring out consumer needs, customer needs, business needs. How do we ensure that we make it so ubiquitous in a way whereby they can easily use our product? And that's been our North Pole at Flutterwave. It's always that goal, that ambition to always, how do we make payments simpler? How do we make that payment experience simple so that the person that is making that payment does not have to think about, oh, I want to do it twice or do it 4 times. One of the things that we like to think I will talk about is the Jeff Bezos ethos, where we say customer obsession. We think that a customer is in the room every time we are making a decision at Flutterwave. How do we ensure that customer, that consumer, that business, within the confinement, obviously, of regulation, is able to perform what they should perform at the right way, at the right speed, of course, with the right quality, across board. So I would say the biggest challenge we have is figuring out customer needs, because sometimes what customers say they want is not what they need, right? We've seen that as well when you look at the era of BlackBerry and the iPhone, where we all had Blackberries. We're happy with Blackberries. If they do a customer survey and say, what will you want? People will say they want a better Blackberry, a faster Blackberry. But nobody will say they want an iPhone, because the iPhone at that point has not been made, right? So the question was, how do you decipher what the customer needs over what they want? And that, I guess, is one of our biggest, area of challenge, where we are constantly trying to figure out what does the customer need, not what they say they want. Because if we can get that need point well articulated, we can then be able to build products to solve that need. So that's what I would say is our biggest challenge at Flutterwave, and it's still a challenge till today. Yes.
If you were to start building all over again, what is that 1, 2 things that you would have done differently?
If we're to start building all over again, the first thing we're going to do is to, the same amount of attention we pay to technology, to new product, to innovation, to customer experience, we'll pay even greater attention to regulatory compliance, right? And to risk management. Because, but then if you think about it, right, at that point, we were just starting, right? We didn't have the world view we have today of the landscape, right? So I guess what we'll pay attention to a lot more will be having that world view of the as you create, as you innovate, you're also creating risk. As you're creating risk, there has to be risk management and mitigation plans in place to ensure that every risk being created is well contained, and the risk, even if they are created, they are calculated, and there is value being created that surpasses the risk, right? So that, I guess, what we'll do better if we're starting today was to pay a lot more attention to that piece, right? Also understanding that it takes a village to build anything, right? So we can't just by ourselves decide to innovate. Whilst you can innovate on the technology front, there's customer innovation, there's relationship innovation, there's regulatory innovation. There's so many other pieces of innovation that we will also take into consideration if we're starting today. Yeah.
Good evening, everyone. The previous speakers have done a very good presentation. So I'm just going to talk briefly because I don't have any prepared presentation. I also talk about making a regulation and making of unicorns. The objective of regulation is not necessarily developing unicorns within an industry. However, a conducive regulatory environment may foster growth. The Central Bank of Nigeria has over the years introduced policies that have accommodated innovators and new entrants within the financial service sector. The implementation of the strategy of the bank on payment system has provided a robust infrastructure, which has opened up the space for different innovations within the banking and payment system. The bank therefore continues to seek avenues to further enhance the environment for birthing innovation and strong institutions within the banking and payment system. Some of the regulatory initiatives that have spurred the growth of fintechs within the banking and payment system in Nigeria include the following. One, the Payment System Vision 2020. The initiative drives electronic payments along 7 verticals, including government payments, mobile payments, and others. They open opportunities for fintechs to play within the payment space. 2, the introduction of mobile payment regulatory framework in 2010. Aside switches, the first set of fintechs that were licensed by the bank included non-bank mobile money operators. 3, electronic payments of government suppliers, vendors, taxes, etc. The guideline on this provided opportunities for payment solutions service providers. 4, the retail payment transformation and cashless policy. This also drove the imagination of innovators to play more actively within the Nigerian payment system. The repositioning of NIPS as a shared infrastructure and the operations of the National Central Switch provided greater access to fintechs to connect to the payment infrastructure. Sequel to the cashless policy, the bank introduced a role for non-bank within the card payment system as it licensed the first set of payment terminal service providers. These are the institutions that deploy POS on behalf of the banks. Then the introduction of NIP through the Retail Payment Transformation Initiative of the bank was an extension of the payment rails, and fintechs have leveraged on it since its introduction. And indeed, the growth of e-commerce in Nigeria was encouraged through implementation of cashless policy by the CBN. I wouldn't want to bore you with statistics because the first presenter has given statistics on the trajectory growth of payment of e-payments. So the next wave is the regulatory sandbox, the open banking, payment system security and risk management center, and then the payment system vision 2025. Thank you.
Thank you very much for having me, Fintech Nigeria. For me, I'm speaking on behalf of myself. So clearly, just to put out that disclaimer, but particularly, it's an interesting time that we have found ourselves in. Fintechs are a very, very important part of the financial system, and more so the capital market. And I dare say that there's so much popularity about the payment systems and fintech, but more importantly is the fact that the capital market has more to do with the fintechs than even the payment system. So the payment system for me is a one-way route, it's a one-way route. So as different from the various things you can do in the capital market with fintech. Of course, finance being enabled by technology has so much to do with the capital market, where you talk about the creation of wealth, which affects so many persons. For us at the capital market, what it's paramount for us with fintech clearly is about the protection of investors. Section 13A of the Investment and Securities Act gives the SEC the power to regulate investment and securities business, while Section 13K speaks to the protection of investors via a lot of means. And the challenge we have as a market and as a people, is that we seldom look at that part that deals with the protection of investors. And the investor clearly does not have anybody, that bothers about them other than the regulator. I like what Gbenga spoke about when he spoke about the necessity for a relationship between the regulator and the innovator or the fintech industry. That is because where you do not have rules, what you have is chaos. And where you have rules, you are talking about organization. The essence of the SEC is to protect investors. But besides protecting investors, from its mandate of regulation and market development. On the market development, of course, our aim and desire is always to encourage innovation. And for that reason, what we have done in the past 5 years regarding fintech, we can at least beat our chest to say we are at the forefront of actually creating regulatory innovation in fintech. And that is why the SEC actually set up the fintech roadmap. And of course, soon after that, we had the Committee on Blockchain and Virtual Financial Assets. All of this is with a view to having a relationship with the ecosystem, the fintech ecosystem, in order, one, to understand them, two, to be able to work with them, and three, to be able to protect the investors. So in all, what the intention of the SEC is and has always been is to protect the investors first and foremost. So no matter what we do, no matter the kind of regulation we put out there, if you look behind that regulation, what you will find is the protection of investors. And that is why just yesterday, the SEC, the DG of the SEC, Mr. Lamido Yuguda, said clearly that the desire of the SEC is not to stifle innovation. It's always to project innovation. And in protecting innovation, what we must do as our primary responsibility, as our constitutional responsibility as the SEC, is also to protect investors. And with the protection of investors, what we are going to be doing at that is to provide confidence and trust in the system. And with the provision of confidence and trust, it means that we are creating a wider market, wider opportunity, better opportunity, and inviting more persons to participate in this ecosystem. We are yet to see, the best of this system, but it is important that as regulators, we are up to the game. As regulators, we are watching closely. As regulators, we are actually in the game, making sure that everyone is protected, because where no one is protecting anybody, then nobody will be protected. And that will be injurious to society and even to investors. Thank you. So for me, I guess that's it for now. Maybe if there are questions, ready to take it.
How can this trend, whether it's real or imagined, how can it be reversed? Because that's really what a lot of investors will tell you. So I'm throwing that question to you, if you don't mind.
What is important is engagement. We must continue to engage, and we must continue to have an open mind. The point where the fintech industry or the participants in the fintech space will, of all times, assume that the regulator is not in their support is totally wrong. At all times, the regulators are also Nigerians. They are also, investors, as the case may be. So why would the regulator work against itself? Or why would the regulator work against its people? So we must continue to engage. And once you do not understand, the regulator is always available to listen to you. A lot of times, and I think one of the issues is that the fintech participants, a lot of fintech participants do not even know that they can reach the regulator at whatever time to clear up any issue that they have. So it's very, very important that the fintech participants know clearly that the regulator has an open door. Wherein you do not understand an issue, all you need to do is reach out to the regulator. And by the time you discuss with the regulators, I am very, very sure you will have a change of heart regarding our circulars, regarding policies, and we'll be able to move forward together, trying to make sure that the system is healthy that the system is very and the system is successful at the end of the day.
Based on what Mr. Java said, he was talking about the issue of trust. And I'm asking you that, even though I know you mentioned in the page when you talk about regulation innovation, so I'm asking you that how can we increase the trust between the innovators and the regulators and also increase the collaboration?
Thank you so much. I think the first thing for me is maybe the first thing will be going back to the basics, which is a lot more engagement needs to start happening. And I'm very happy to say that this is already happening today. Even though most people are not aware it's happening, right? Regulators are actually very open to engage. We have seen that firsthand at Flutterwave, and they're willing to listen to understand what is going on, what is happening, and they're willing to help. The other piece also is we operators also need to do more of reaching out, like last speaker mentioned, in the sense that, you know, it's not only when things go wrong that you go and plead your case to regulators. When things are going right as well, we should go and communicate about how we're doing it, what we're thinking about, here are the plans, because sometimes we always underestimate the breadth of the regulatory oversight, in the sense that the regulators see everything. They see, you know, different perspectives. So they are actually able to advise from a helicopter view that we can never even imagine, right? We are realizing that, for example, you know, very quickly in our space, that regulators, when they are engaged before you launch a new product, before you do an initiative, right? It basically shows, it speaks a lot to, you know, the value of the joint value creation that can happen there, right? And it's always very rare to see a regulator be a part of building something that they also want to tear it down. And that's almost impossible. So I guess a good point there would be a lot more engagement, both from the innovator side, or the operator side rather, because I mean, both parties are innovators, and also from regulatory side. And also, you know, being able to also understand the thought process behind some of the policies that comes out, you know, engaging to also even get a better view of those policies, right? That would also be great. You know, recently, you know, there was a brouhaha in the industry regarding BVN, you know, and BVN being restricted and all of that. And I think, you know, by global standard and best practices, that is the right thing to do, in the sense that Nigeria's data and information cannot just be with any third party, even be it a fintech or be it anybody, because that data and that information in the wrong hands can create a problem for us. So question would be, how is social security number being kept in the US? The BVN, in my own view, is as sensitive as our social security number in Nigeria, right? And, you know, putting the frameworks in place to ensure that data can be accessed properly with the right authorization, ensuring that our data doesn't end up on a dark web somewhere, is the right thing to do, you know, by every standard, right? And sometimes, right, when even we fintechs don't actually communicate about the value proposition of some of the policies that are actually coming out now, right? You know, then that will be a problem. Another one that came out with was the high MTO policy around dollar remittance to Nigeria, right? Before that policy came out, it's been on the street that, oh, people want to get their dollars in Nigeria by themselves. They want to be able to have a choice to go and change their dollars as they want it, right? They don't want it to be changed to Naira by some third parties in the middle. And that policy is an example of regulators listening to market dynamics and obviously doing what makes sense for the entire overall value for the country, right? And I think, and those are some policies that has been very, very forward-looking, and that we need to also, you know, communicate and give feedback to both the industry, the networks, as well as, of course, back to regulators. I think the solution here is just engagement, right? Because sometimes I'm not really sure the regulators understand how some of the policies they bring out being applauded on the fintech side. But because there's a gap in communication, people are unable to share that, hey, this policy really makes a lot of sense. And as a matter of fact, the operators in the industry, actually see the value of the policy to the average Nigerian, because now if someone sends you money from the US, you can get that money in US dollars in Lagos, from your bank, or you can get a dollar in your domiciliary account, right? Those were not there before. Those are new innovations, but from regulators that actually helps a lot in spawning new innovation drive from operators. So those are some of the things I think needs to be, in an engagement, in a conducive engagement framework, that those things to be communicated to the regulators and vice versa. So everybody can understand that, yes, there is this communication bridge and we can meet there and we can both help the ecosystem to get better. Thank you.
Thank you, GB. Let me throw this one to Mr. Wasa, if you're there. And it's just to understand that, what you go through as a regulator, and so it will be one of the challenges that you face, even when you as a regulator, you are trying to deal with the innovators of fintech. What are some of the challenges that you face?
A key challenge is ensuring that players in the payment system industry stay within the remit of permissible activities by license categories. Another challenge is the management of requests from the investors. Good corporate governance for payment system entities remain a challenge in the industry as these entities increase in scope, size, and complexity of activities undertaken as expansion in the industry. So most of the problem that we see is that most of these fintechs, do not liaise with the regulator before bringing out innovations. What the regulator wants is to be able to understand what they are doing, because we're interested in knowing the risks that are likely to occur. I also want to look at the consumer protection, and these are some of the things that we found out. And then some of these things that they involve in activities that are not under the remit of their license. So, which is a challenge. Just like the previous speaker has said, there is need for a lot of engagement. You need a lot of engagement. That's why even in developing our policies, we ensure that we carry the fintechs and other participant industry, so as we share, we discuss with them, and then we issue draft policies so that they will forward their comments, after which we finalize the framework. So there's a lot of engagement with them. This will reduce a lot of this problem that we're having. Thank you.
Okay, thank you. Thank you very much. Let me ask you, Mr. Agama, if I know you mentioned that the SEC organized or launched the fintech roadmap. Are there some other regulations coming from your side or from policymakers in general designed to strengthen the fintech industry?
Yeah, thank you, CFA. Yes, indeed. I'm sure we are all aware that very recently the crowdfunding rules were released, and that is, a great one, because that will assist a good number of small and medium-scale enterprises. It will assist a lot of fintech even to raise money. It will assist the small and medium-scale enterprises to be able to reach out to get money to do their businesses, and of course, improve employment for all of these kinds of institutions. Besides that, the rule on digital sub-broker is also effective from yesterday, actually, and that alone will allow fintechs to be able to reach out to willing investors who want to invest in the Nigerian capital market. And so we are doing all we need to do to be able to get, fintechs into our space. properly regulated. Of course, we also have in the pipeline the robo-advisory guidelines and every other guideline that we think will be useful to the fintech industry. Sometimes innovation, and most times, and that's what it is, most times innovation comes first before regulation. And as has been spoken of by my other colleagues, it is important that this engagement continues, because when you engage with the regulator, what he understands and sees, you may not say it. And that's why I say, when you are playing football in the field, you do not see your mistakes because you assume that your legs are doing so well. Whereas you are, just playing the ball out of, space or where it should actually be. And that is the position of the regulator. Because you are playing in the field, the regulator sees you, sees your totality, and is able to see where your mistakes are, is able to see where you need to cover in order for you to be able to reach out to the public. Besides, we have a responsibility to everybody, both the innovator and the investor. So if you take care of yourself alone as an investor, as an innovator, because you want to make money, who will take care of the investor? That is the responsibility of the regulator. So the regulator takes care of the innovator and takes care of the investor. But oftentimes, the innovator never thinks it that way. They always see the regulator from the angle of wanting to stop their business or not being interested in them. Or in fact, they go to the extent of saying that the regulator is not even knowledgeable enough to be able to regulate them. Who said so? You forget that the regulator and the innovator were all classmates or were students together in the same school. The regulator could even have been doing better. So why do you think that the regulator does not know as much? So the regulator has the opportunity to be able to see things from different angles. And because he has that opportunity, he's able to combine that experience to be able to advise more, better, and properly in order to get things done properly. So that at the end of the day, it is the regulator that will actually defend the innovator when the chips are down. Without that relationship, that will not happen. And that is why it's very, very important that the relationship between the regulator and the innovator or the fintech participants must be symbiotic, sharing information and making sure that we are honest to each other. A lot of times, what the regulator finds out is that some innovators are not honest because they think that the regulator does not see, not until it is pointed out to them that, no, this is what you are doing. And then, they start coming out, rather very lately. But it's important that trust is built. The innovator comes forward and the innovator is open to exactly what he or she intends to do, what he or she intends to achieve, so that they are within the regulatory remit of such institution or jurisdiction. And with that, there certainly will be no problem. Regulators and innovators will always be friends, and they will continue to be friends because they all work for one purpose, the development of the economy.
Thank you very much, Agama. To our audience, we want to thank you for being with us up to this point. If you have questions for any of our panel members, please drop it on the Q&A section, and I'll try to attend to them. But Jimmy, let me quickly ask you this one. I just want to know your thoughts on this, right? Yesterday or 2 days ago, Coinbase capped $100 billion. Now, if Coinbase had waited for regulators, will it get to this point? I'm asking you this question. If I'm a fresh fintech today, how can I balance both? Because I need to run. So in 2012, Coinbase had to move to the market, and today this is what it is. What are your thoughts on how younger fintechs can balance this sort of reality?
Thank you so much. I think the question has already been answered in the earlier conversation, right? It's just engagement, like the last speaker also said. When there is a proper symbiotic relationship between regulators and operators, right? When the chips are down, regulators will protect the operator. That's just the way it works, right? If you look at the Coinbase example that you mentioned, when Coinbase started, right? Coinbase was one of the few companies, even though they were in crypto, they went to go and hire ex-regulators to join Coinbase. to help them to build a regulatory frame where the US government used to basically approve crypto in the US, right? So they basically self-regulated, with the thinking that what if we were licensed? How would we operate this business? And that's what they did, right? So I think that is a very huge lesson, right? In the sense that even when what you are trying to do has not been, it does not have a regulation yet, how about engage the regulators? How about show them what you're trying to do? How about before it becomes a problem, at the beginning, right? And I think that alone is basically what's basically helped build that industry in the US today, because of the work that people like blockchain.com and Coinbase did, by engaging, the regulators, showing how, at least payment that go through their crypto system will not be used for terrorist financing, addressing all the risk elements of the that regulators would have even before crypto was mainstream, right? So since 2012, they've been doing that, right? 2012 to 2021 is basically, almost, that's a lot of years in there, right? So with that time that they've used to engage regulators, explain what they're trying to do, show their numbers, right? I'm even aware that Coinbase was basically sending, report to the US Treasury even before there was no requirement to send those reports, right? So I guess that level of engagement, transparency, trust capital being built is what is needed to be able to, do things like that and do it well. And of course, give regulators the right incentive and the right framework to then use that model as maybe the model that might be used to even, license this thing or whatever is required, right? But I think, as usual, right, that is very important. So I think the Coinbase example paints the picture that we're all saying about there has to be a proper relationship between regulators and operators. Operators must know that indeed the regulator was probably an ex-classmate or something, right? And bring them on board. There's a wealth of knowledge that is untapped in that space. I think even we operators need to tap into our space and use technology to accelerate it. And that's why I think, the best way to go about this thing.
Thank you, GB. This is just to say thank you to all our panel members this evening, to our special guests. Thank you, Alhaji Umaru Ibrahim, for the first presentation. Thank you, Gbenga. Thank you, Emomotimi and Agama. Thank you, Wasa Francis, presenting Musa, Jimoh, Director of Payment System, CBN. Thank you all for your time this evening. To give us the introduction of new members, I'd like to call on Stanley Jacob, Vice President, Fintech Nigeria, to take the podium.
I will say thank you on behalf of the President of Fintech Nigeria, Jimoh. Thank you, Mr. Agama. Thank you for taking your time to be here. Mr. Francis Wasa, representing Musa Jimoh. Thank you for very good insight. And our own GB, where is he? Is it still online? Okay, he'll get it when we share the recorded version. Thank you, thank you. And the DG of MD of NDIC, or DG, what is it? The former MD, thank you for the presentation, very good one. And also to thank everyone here today. Thank you for your patience and your time.